Welcome to the AAIS DriverScape webinar. This is a research report, and we would like to just try to have a good conversation about where the market is headed, what can we do about it, and how we can best leverage the opportunity in front of us. What I wanted to do was just go through a couple of things, right? So first, let's start with what is DriverScape, what are we talking about in 2023. Then we'll go into what the survey was built with, what is the market structure as we see it, and then look down at challenges and opportunities by each specific segment. So with that, DriverScapes is a survey that we are running directly going to drivers to try to figure out their attitude towards usage-based insurance. So we know a lot of things about usage-based insurance. It's been around for the last 10 years, but we want to get to the crux of the matter to try to figure out exactly what the challenges are, what the opportunities are, and we just want to get to the depth of it. And the goal is to not just know, but also act on it. How can we go to market better? How can we design better products? What concerns are there that are lingering that we kind of can overcome? And as a industry, when we pick and choose and go to market in different ways, the attitudes will change over time, and that will give us an idea of how are the attitudes changing? How are they deciding on telematics and usage-based insurance? What can we do to adapt to the changes in the attitudes, and therefore segments and the demographics of those segments? And it gives us a better and comprehensive picture of where we are, where is the market headed, and what we can do about it. And that's the goal we would like to accomplish as we go through this webinar today. We will be taking questions at the end. Make sure that you are able to add the questions on the chat window, and we will get to them. If you have them along the way, I'll be happy to take them. And as we go along, just to make sure that we stay consistent and complete the discussion on each topic as we progress through the session. First, let's start with the survey respondents, right? Who are we talking to? What are we doing? And how are we making up, or how are we building conclusions that we can build on top of? We surveyed across the spectrum. It was a random sample online survey targeting 95% confidence with an 8% deviation. But once you design it and you run the survey, things get adjusted, and we can say with 90% confidence with an 8% margin of error where we stand and what we can talk about in terms of the results that we conclude and talk about later throughout the session. So we covered a broad spectrum of household incomes, as you can see, broken down by household bands. This pretty much follows a pattern that is similar to what the actual demographic looks like. There is a slight skew with the 200K plus coming in at 5%, but that is just by the nature of the channel that we're going in there. We are not discounting them out because it's all anonymous. I cannot really tell who I should discount out and just get that in order. So we kind of have to live with the skew that comes in there. The age group is not, again, in the similar way to what we see in actual demographics, but pretty consistent in the way the age bands are spread out today. And gender, of course, is very consistent with what we see with the population today. So all in all, I think the 90% confidence with a 8% margin of error is what the data kind of indicates as we go along. With that said, how does the market look like today? In 2023, we can say that 35% of respondents indicated that they use usage-based or telematics-driven auto insurance today. And the 65% of the respondents are saying that they're still on traditional insurance. This is a big jump, and I think on the higher end of the spectrum, based on our last year survey, and we'll go into how that changed over year. But what this is saying to us is the market structure is changing. The thought that we had earlier, where we assumed that it would be a very hard sell, and just because we have been deploying usage-based and telematics-based insurance for the last 10 years and not succeeded and not gone beyond 15%, and the 15% bump happened just because of COVID, we find that the attitudes are changing significantly. And we will be looking deeper into what we can find out about the usage-based insurance market as well as traditionals. And so at this top level as a carrier, you can think about trying to win consumers or drivers who are already familiar with usage-based, and your approach is going to be different. Or you can convert the ones who are on the traditional spectrum and then have a better chance there, or based on your market, based on your situation and your willingness to go in different directions, you can choose which segments or which market you want to go. But the first decision you have to make is, are you going to win over somebody who already has experience with UBI or not? And that, I think, is a very easy decision to make as we go down into the depths of this the results that we have gotten so far. So year over year, how does this look like, right? Last year, when we had the same survey and we asked the same questions, we pretty much asked, are you on telematics or not? And if you were on telematics, you were out of the survey. We did not ask a next question. But this time we had a few follow-up questions to them, just to get a better insight on who are these people, what are they saying, and what are they looking at. And if you are not on traditional, you are not on telematics-based insurance, we would go deeper and try to find out what are your concerns, what would make you switch, how do you rank different aspects, and then look at ways in which we could create segments. And the same process has continued in this year as well. We try to stick to the same process as last year, just to make sure that we are able to compare over years and have a way of building the third year and then compare over 3 years, and just make sure that we are able to get the evolution, the story of the evolution of the market as things change, as we go to market with better products, better technology, and get feedback, get more experience along with the drivers in the space. Now, just the top of the head here, you can see that there is an 18% increase year over year in the respondents who indicate that they are using telematics today. That means that the traditional market is shrinking quite fast, and we cannot be thinking of ways in which we cannot evolve with the market. We have to evolve, or we will end up with a smaller slice to fight with. So that said, how do the demographics shift between traditional and like year over year, and on traditional as well as usage-based, right? So I'd like to just pause here and just look at the two things that we have here, right? By gender and by age bands. The image on the left indicates the demographic last year. How did we collect information? What was the gender, and how was the age band dispersion? And on the right, you can look at what we found this year. And you can see that the age bands were slightly different. We were not adjusting for less than 24 years, even though we were running the survey for adults above 18 who would buy auto insurance and who were licensed drivers. But we just did not have the granularity to break that below 24 years band, but we do now. Now that shifts quite a bit of in terms of the demographics and the way we can display the results. Now, as you can see, and we'll get to what this means, but this particular band year over year has changed quite a bit. In 2022, which is the imagery on the left, the bands of 45 to 54 were pretty large, so almost 23% of the market. And if you look at the same band on the right-hand side, it is significantly shorter. The 55 to 64 band is slightly larger now than last year, and the 25 to 34 band is way, like almost halfway down. 65% is slightly up, but you can consider that to be almost a flat year over year. Now, if you had to guess what was this image year over year and what are we talking about, this is how the traditional market looks like. This is not usage-based. Now, if we look at the similar characteristics of the usage-based or telematics-driven market, you can see that the adoption last year was more skewed towards younger and very older, and the middle bands were not so accepting. But this year, we are finding that the shift is moving in a similar pattern, right? So the younger bands are accelerating their adoption. The older bands are accelerating their, are kind of like falling behind, but the mid bands are catching up. And the graphs look very, very different this year than last year. And we want to make sure that we bring this out just so that you know when you are going to market who you are targeting, who you are retaining, and who you are losing to the next market. So this demographic shift is kind of like talking about where we are kind of like evolving. Now, I see your questions coming on the webinar chat here. Any insights for commercial auto? Well, we conducted this survey for drivers who would purchase insurance. Now, we did not ask the question about whether it was commercial or personal. It's just auto at this point. So I do not have the breakdown by personal and commercial, and it's a very good question to ask because we can make that ask in the next survey so that we can break that out and have a skew of like how the buyers or the drivers are reacting or evolving over the years. And the next question is the left the last year and the right this year? The answer is correct, yes. The figures on the left are last year, the figures on the right are this year. The figure on the top is traditional, and the figure on the bottom is usage-based. And this kind of like gives us a picture of the evolution of the segments, the big picture segments over the 2 years that we've been running this survey. I hope that helps. If you have more questions, we can hold off on that and we can address them as we go through the presentation. So we asked the question last year, why are you going to usage-based insurance? And the answer was premium discounts. And this year, the answer was the same, premium discounts. That is primarily the reason that a lot of current telematic subscribers or insurers are going to usage-based insurance. And if we drill down and look at what kind of usage-based insurance are they using, we can see a breakdown based on the form factors, right? 49.6% of UBI drivers are just using mobile-based. They do not have dongles in their cars. Their trips are being calculated or measured on their phones. 23% have mobile as well as a dongle, and 18% have only dongle. And there's a very small percentage, 9.3, who indicated that they are using connected cars. Now, this was a surprise to me. I was expecting this to be much smaller, if not zero, but there are a lot of consumers out there that feel that they are using connected car. And I am not really sure. We have not done this research in trying to figure out how many uh, carriers offer this kind of insurance in the US. It has been offered across the globe, but we can expect that number to start growing as more privacy and consumer protection features make their way into the cars, and we get into these more high-tech cars as we evolve. And the dongle will still be there for the legacy in the older cars, but the primary mechanism that seems to be emerging out of our experience over the last couple of years is consumers prefer and like the mobile-only application or usage-based premium determination, if you will, or usage or telematics that are embedded only inside the cell phones, to having a dongle inside the car or using the car itself to determine premiums. Now, this was again a surprise to me. Be happy to look deeper into this and try to figure out how this is evolving. Now, the next question that we asked UBI drivers this year was, who are your providers? And it did not come as a surprise that 60% of the UBI respondents said that they subscribed with one of the four major carriers. Now, based on our policy, we do not disclose the names of the providers, but if I show you the picture, you can see that the number 1, 2, 3, and 4 make up about 60% of the market. And there is a broad spectrum of respondents. So I think we had about 28 other carriers that were indicated that made a big slice. The unknown or did not want to say was just 6% of the respondents. So this is following a similar trend that we see in the overall personal auto market, right? The large top 4 or 5 carriers own a majority of the market, and everybody else kind of like spreads out much more narrowly over the spectrum. So this is how the UBI market responded. Based on the responses that we got, we will be asking more questions moving on. But for now, this is what we can say with confidence that we set out to do. So 90% confidence with a 8% margin of error, just so that we are consistent with our findings here. Now let's shift over to the other 65%. Now this is where I think the biggest opportunity for growth is for a lot of our carriers, right? That market is going to shrink, and it's going to shrink unevenly. But what does that mean? So we looked at the 65% of traditional market, and we believe that this is the greenfield opportunity. This is where you get to convince and win over the audience towards your usage-based insurance offerings, if you will. What we did was like ask them a question about like what are the challenges, what are the opportunities there, and we couldn't really make much of a headway there. So we asked the questions about like, how willing are you to try usage-based? That was the first set of questions. And the second question was, can you rank what will make you switch to usage-based? And using those two vectors, we were able to say that on a 7-point scale, the respondents who responded with 6 or 7 stars as acceptors, and that universe makes up about 31% of the market there. The mid spectrum between 4 and 5, like 3, 4, and 5 are undecideds. Then they're not sure. They sit on the fence. That made up about 52, and detractors were the ones who said no, or one. So like on a 7-star spectrum. So the ones who were the least accepting of the market. And using this, we are able, when we looked at what they were saying in terms of their priorities and what what would make them switch, there was a significant shift, and we were able to say that you can attack them in different ways, and that presents a very good opportunity moving forward. So with that said, let's dive deeper into each of these segments, right? Now, what we are talking about is that 65% who are on the traditional auto insurance, we have broken them down into 3 segments: acceptors, undecideds, and detractors. And we will look at the acceptors in the next section. So acceptors make up about 31% of traditional insurance. So overall market, it's about 31%. And if you look at that breakdown, it kind of like gives you a chance to say these are the respondents who are saying that they are not opposed to or not detracting from switching over to a usage-based or telematics-driven insurance. Now, these are being the most amenable audience out there. We can ask them many more questions, which we'll get to in just a little bit. Now, how does this segment look like compared to last year, right? Last year, this segment was about 14%. And this year, we see a significant jump there to 21% of the overall market. Now, these are so if you look at the bar being 100% of the insurance market, the gray section is the people who already have telematics-based insurance. That has grown significantly year over year. Now, the closest segment to them, the ones who are accepting, is seeing a 7% growth of the overall market. And that is like a very, very good news, because the conditions are favorable to win them over if you are already in the market or thinking about going into the market. We wanted to just ask more questions about these segments. And when we did the slicing and dicing of the data, we found that there are like 3 winning strategies when you want to win them over. So as a carrier, you can start by leading with the driver data access controls. So making sure that the concerns that drivers have about who has access to their data are handled with your privacy policy, with your data sharing, and being very, very clear that the drivers are in control of the data and the access to that data. You have to demonstrate your commitment to privacy, to driver privacy, and you have to assure the market that telematics are fair, and it's just a score that is based on driver habits. There's no good or a bad driver. There's a spectrum of drivers, and based on the risk, based on the situation, based on the conditions in which you drive, your policy premiums will be determined. And it's the best way of ensuring fairness in the market today. And that kind of like makes it easier for the acceptors to kind of like switch. That's what they have indicated in our surveys so far. Now, that does not mean that there are no challenges, right? The things that bubble to the top in terms of like what they would, so the bubble to the bottom, if you will. So the winning strategy is like, okay, if you address this, you are on the, you're going to switch. But what are the things that are going to help you not switch? And the number one is description of the privacy. So if you focus on privacy, which is very similar to what we talked about in the winning section, you kind of like you have won the battle halfway. The next piece, which is more important, is the mechanism for data rectification. If you look at the responses and the verbatims that came back, just having control of saying that, oh, that's wrong data, And just talking to a lot of folks who have tried UBI, it comes down to the fact that you do not agree with the telematic grade for a reason, and you having the ability to rectify that and saying, I was not driving the car at that time, or I was driving under these circumstances, or the speed limit that you have considered for that segment is incorrect. And having that kind of information back as a feedback mechanism kind of helps overcome that challenge. And finally, transparency in data capture, just letting them know what you are capturing. So it's common knowledge to try to focus on the ABCs, so acceleration, braking, cornering, and speeding. But how and why and under what circumstances is pretty much what wins you the battle with this segment. Now, when we looked at the bands and how they spread out, we find that the acceptors are more skewed at the older age band. So this is an interesting insight that came up for us, which is we saw that the 65 plus band was shrinking. The 55 plus band was also shrinking, but we are not really sure where on the spectrum they lie. And if you look at this chart here, you can see that this is where they are most amenable. So if you had to target and go after an audience, those would be the two good segments to go after, followed by the 35 to 44 market, which I would assume to be a very competitive market anyway, but though that would be the next one, followed by the mid as well as the lower end of the spectrum. So this gives you an idea of where to focus your energies. And if you look at the gender split, it's almost even. We can't really say how one gender skews one way or the other, but I would kind of like extend my guess to say that women are more likely or more open to switching in the age bands that we are finding out for this particular segment. Excuse me for 1 second. Now, we wanted to look at the next band, right? Who falls under the undecided market or the undecided segment of the market? These are the people who indicated in the middle of the band. They're neither okay or willing to move, or nor resistant to the idea of moving to usage-based insurance. Now, this is a majority of the market that is there today. Now, they will need a little more work, and if you look at the spectrum that we talked about earlier, they are closer to, they're in the middle of the spectrum, and it's shifting upwards. So it squeezes out the reluctant market, but they're not as close to the current users of telematics-driven policyholders. This market is growing quite a bit. Year over year, we've seen 14% growth, and this may drop over the next couple of years, but I would like to see how this market evolves. There are many factors that we kind of like will be going into how this segment looks like, but I believe that this, if you are trying to nurture and try to make a play for the usage-based market over the longer period of time, this is a key to winning the market, in addition to winning back drivers from other players who are already using the usage-based market. So this segment looks a little different compared to the acceptors, right? Their number one reason that they will switch or they will adopt the telematics-based insurance is by transparency. So just understanding how premiums are calculated is your key to winning with this market. Now, this is going to be a longer sell, and starting with transparency is going to just get them over to the hump of like going to the next question, which looks very similar to the question that is finally lingering with the acceptors, which is how are my privacy controls, and what controls do I have on in terms of access to my data when it's collected and used for policy making. So it's the path is very simple and very similar to what we have seen. And as you can tell, the objections that are raised by the earlier segment still have to be addressed, but there's one more additional one that you kind of like have to overcome to win this market segment. Now, the challenges are again in a similar vein. Are you willing, or are you able to maintain driver policy, or are you able to demonstrate that driver privacy is maintained? The telematics is fair, as well as the controls on driver data are very strict, and you take driver privacy very, very seriously. Now, these are very simple things that we have to do anyway with more regulation coming along in terms of how consumer data is managed and handled. This is going to be no surprise for us. Now, if we look at the segment and the composition of the demographics of this, the large section of this is males or older men who are willing to give it a shot, who are undecided, but who could be won over by leading with transparency, privacy, and data controls. The ones on the younger age bands are pretty much like made up their minds. I must say for a certain up to a certain point, but they can be won over relatively easier as the market evolves over a period of time. Now, let's move to the final segment, right? Traditional insureds that are not interested in telematics. Now, this market, as we talked about, is shrinking. It is now just 17% of the traditional insureds. So we are expecting this to shrink over a period of time as people get more confident in sharing their information, data, as well as getting familiar with the options and the benefits that come with pricing accurately over a longer period of time. Now, this is a 26% decline year over year. And pretty soon, this market will be kind of like leading or leaning more towards some form of telematics that will kind of like help you with pricing a lot better. It may be intrusive where you have a mobile app, a dongle, or a connected car, or it could be very, very light where you gather information from third-party vendors or through voluntary disclosures, verified voluntary disclosures that you can trust, and then use that as a mechanism for deciding pricing as well as discounts as we evolve in the market. How does this small shrinking segment look like, right? And what are their concerns? We ideally did the same analysis as with the others and came up with this is going to be a really long sell. And the number one concern that they have is rectification of data. Clarity and fairness of telematics comes in the second and third. So addressing these are required. So you have to be able to make a case to say, well, this is the way to go and this is how it works. So not very useful in terms of action today, but it gives you a direction to say that when you start on a spectrum, how do you start thinking, and then as you evolve, what does your evolution look like, and what are the things that you as a carrier can focus when you're building products, when you take to market to them. The challenge remain the same: driver privacy, rectification, and capture transparency. Uh, Everybody talks about the ABCs, and there is disagreement, and how do you address disagreement is pretty much what we are leaning towards. Now, it should come as no surprise that a majority of this market kind of like skews on the higher end of the spectrum, and it is going to be a long sell, and that's just how uh, the market is today, and it was last year. If you look at the strategies and challenges year over year, there's very little difference. Not enough for us to even call that out and say, here were the challenges last year and here are the challenges different this year. They are very much identical. It's just the size of the segments have shifted quite a bit over year that we wanted to highlight and bring it out to you guys, so that you can kind of like take a look at what's available and how to navigate this market. The next piece that we wanted to quickly touch about is the data ownership preferences. Now, we asked this question for both these segments about who would you prefer. So we asked two questions: who would you prefer to own the data, and what would change your mind into adopting? There wasn't really much to indicate how addressing any of these concerns would help us like win a share or get better clarity at winning in this market. But what we found was with 90% confidence and 5% margin of error is overwhelming majority of the respondents indicated that they would prefer drivers to own the data. And the way the world is evolving today, that seems to be the case. The percentage that said others could be involved or own the data was very small. 25%, approximately 25% were okay with insurance carriers, and about 13% were okay with OEMs or manufacturers owning the data for that is collected on UPI. Now, this looks very much similar to the split that we have seen with the telematics adoption, if you will. So if you look at mobile phones plus dongle, and connected cars, this falls in a similar pattern, if you will, if not in the exact same ratios or proportions. So we'll keep an eye on this, and then try to get to a deeper part of how we can evolve and address these concerns that come along. And finally, I just wanted to summarize what we've talked about, right? So DriverScape was building on top of the research that we did for the first time last year. And we built our surveys based on the GDPR principles for data handling and rights. We took those 6 pieces and said, what would it mean? What would transparency mean? What would ownership, privacy, access controls, right to rectification, and features used in pricing mean? What would be the importance in switching to it, or what would be the importance of addressing concerns or challenges in order for consumers to adopt usage-based or telematics-driven auto insurance going forward. Now, our goal at that time was to try to drill deeper and try to figure out what constitutes privacy. And this was the best framework or model that we had at our disposal at that time. And we kind of built on top of it. And we use that as a mechanism to segment our market a little better than just the demographics and make some assumptions along the way. Now, I would love to have deeper conversations with you, get to know your thoughts, feedback, suggestions, and try to refine it even further. And so that when we run this again next year, we are able to get to even more granular, more actionable insights that we can together improve how we offer insurance and how we can measure risk as we go along. Um, like we talked about, the willingness to try is increasing year over year. The detractors are down year over year, and the challenges in transparency, uh, data sharing and access, as well as premium calculation, remain the same as they have been year over year. With that, I will thank you so much for your time and your patience with me. I would like to stop here and see if we have any questions that we can address as we close this out. So one of the questions that came in the chat here is, what are the top current trends that will influence the market in the next few years? I was at AIR last week, no, this week. It feels like last week already. And the 20 by 20 trends, I don't know if you guys are familiar, but I will try to summarize what we found there. But the value that vehicles are retaining in the secondary markets or in the used car market is continues to defy trends. So we saw that the prices shot up just before COVID. They felt like they were dipping, but they are back up again this year. So we don't know how it is going to evolve, and that is a big unknown that is going to affect how much it's going, how we are going to be attributing loss costs to our pricing plans. The second big trend was how the sensors, the ADAS capabilities that are coming in are influencing outcomes, influencing losses, influencing incidents. And that, I think, is going to be playing a big role in the adoption and using of UBI. One of the anecdotal stories that I heard was calibrating the instruments in a car is super important, because if you just buff a car or replace a windshield or fix a ding somewhere on the vehicle, and that moves the screen by even the thickness of a piece of paper, the stopping distance, the lane departure systems can all be impacted very badly, and ADAS can be harmful as opposed to being helpful. So the way in which you are going to be able to get the right kind of behaviors is going to change. And finally, the maturity of data used for telematics is improving significantly. You don't need to be monitoring the driver all the time. Just having a good sample and a good indication of how things evolve and the capabilities, the skills, and the places that the drivers are operating in will give you a good enough insight so that you are better able to price drivers at the time of quote, as opposed to having very intrusive monitoring throughout your policy periods. That should reduce your costs on developing your products, but also make you much better at predicting where you're going. And of course, the final piece is EVs. The cost structure of EVs is very different, and there's a whole lot of data that EVs can provide today that most internal combustion engines cannot. So that is kind of like going to help drive that adoption over the next few years, and more consumers would be either willing or wanting to find out exactly what they can do to reduce their or restrict their premiums, and that is probably going to be a good advantage. I hope that was not too long, but that was a very good question. The next question was, any idea what is the uptake of UBI in other countries? I do not have a direct correlation of studies that are available, but a lot of what I've heard anecdotally Europe seems to be much further along in terms of UBI usage, especially with connected cars. There's a lot of build, driver rating information that is available uh, to insurers directly through auto manufacturers. That is not only helping the insurance industry, but also uh, helping the consumers manage their policies better and have that behavior. And I think that that trend is going to come down over here as well. And there's one more question that just came up here. Our experience with data ownership. In the past, the TSPs felt that they own the data, but now more TSPs believe it is the insured's own or the TSP subscribers. Now, data ownership is a question that we all bring up, but do not completely do justice to as we talk about. So, if we are to go by what happened in the farm and ag world with John Deere collecting all of this information about the farms, the use of their implements, and then like asserting their ownership of that information. And I think there was a verdict that came out like sometime very recently, which said, no, you just stop providing the tools. The tools are being used by the farmers, and therefore the data is owned by the farmers. You are just a custodian in this case. That kind of an example is going to spill over, and it becomes very much common across the spectrum, where the consumers are going to understand that they own the data. The technology service providers, the OEMs, or insurers would not be owning the data in the long term. How we get to that point is something that remains to be seen. But based on the regulation that is currently available as well as evolving, we believe that that's the direction we will be taking as we move forward. And that should take away the last bit of reluctance into usage-based adoption. If consumers and drivers own the data, well, you own the data. We are just being stewards and custodians, and we have to live by our standards. And as that regulation comes and becomes much more prevalent and widely accepted and known, the reluctance to sharing that information will kind of like automatically disappear. So any other questions, feel free to add to the chat window so that we can get a response to that, or we can connect again offline and do a much more deep dive and look at the data if necessary to try to figure out how we will kind of like take it there. Oh, there's one more question. Do you anticipate that improved government regulation on telematics moving forward will help adoption? Well, I do not know about improvements in government regulation, but more standardization is probably what we are looking at. Much more accepted truths, like we're talking about. Whether a regulation is improvement or not is always remains to be a seen fact. Like over a period of time, you will find out that it is an improvement. Sometimes it is not. But that aside, we can expect regulation, which means there is an overhead as well as some kind of a push to try to get us over the fence. Now, the part that I think you are alluding to is like with so many factors such as the credit scores going away, will telematics help? Absolutely. And I think that is the way to go. And a lot of the traditional factors would kind of like will be replaced with newer grades and newer scales of risk that we can kind of like build on top of. The next question is, what are your thoughts on the state of health of a battery in EV having an influence on pricing UBI? The repair costs or totaling the vehicle. Yes, the state of the battery, the residual cost is a ongoing debate that we have to like watch as the story evolves. I believe that there is a lot that we will experience and we will get from between now and in the next of couple of years. There was a session at AIR which talked about the experience of the auto industry or the EV industry in China and what we can learn from them here in the US. And the residual value and the repair cost of the batteries was one of the things that still remains an open question. Just because we went through a few years, like the COVID years were kind of like, biased, if you will, by a set of challenges that are not very typical. And we do not know what to attribute towards those challenges in supply chain, in the lack of demand, in manufacturing issues, as well as the ability to get pieces in place. There was a session on how hard and difficult it is to troubleshoot and repair vehicles, and having the talent to do that, or the technology, or the investments to do that. And as those things become clearer, I would predict that I would expect us to have a better knowledge about how the EV industry and the impact is going to evolve, and what can we expect in the next 3 to 5 years. But anything before that, I would be just taking a guess, and I would be as right or as wrong as anybody else here. So how confident am I in the results of this survey? So like we said, we designed to set out design the survey so that we will be able to say with a 90% confidence and an 8% margin of error where the results lie. And that's what we have tried to do. And there are instances when that margin goes up. And that is because we ask the same question in different ways and get a response that are consistent across the couple of questions that we ask. So the sample size is always determined based on like the population, and we went with the driver population, and then had a good enough sample size for the random survey that we sent out. So that's what the respondents are telling us. Is it true? Are they doing it? What they're talking about? That's an estimate that we cannot make, and nor can we confidently predict or make a guess on. So that's where I would kind of like stay there. I think we have a time for one final question. What are the projections for the future that would help in making further strategic steps? So telematics or telematics-based driver rating, vehicle rating, location rating, road ratings, segment ratings, trip ratings are going to be the future. We can assume that we will have enough data and we will have enough knowledge to be able to price risks appropriately for each class of risk that we are taking on. So moving forward, I would encourage us all to just come together and just have a debate on how are we looking at exposures, how can we change them in the light that we have different types of drivers, different grades of drivers who drive differently on different trips for different purposes. And how do we take that into account? What are the data sources and what can we do with them? Do we need to go the full-fledged route of instituting the complete telematics-based solution? So getting something, let's say from CMT or Arity, is not going to be cheap. It is a few millions, if not hundreds of millions of dollars in investment over a period of time. Are you going to have an ROI? Not at the scale, and at what scale will it make sense? But are there other options that might be easier, less expensive, and much more effective in getting to the place where you need to be? Those are the kind of strategic discussions that we kind of like need to have as a industry, and try to figure out how best we can call what we are offering and then offer it, and then compete and make sure that we are doing well, not only for our business, but for the industry as well. So strategic steps, I would recommend you not look at usage-based or telematics as big investment one time and like operation for a long period of time. It could be a small investment, uh, a bunch of partners and providers coming together in small pilots so that you find your niche that works well with your market, and then grow on top of that and build that out. So those are the 2 points, and there's a spectrum in between. Trying to figure out the options that work best for you is probably the best way to do it. And you don't have to do it yourself. We are here to help. We would love to take your concerns, questions, and ideas into account and bring that back to our service and bring that results back to you again. So with that said, I think we are going over time. Thank you so much for attending today's webinar.